Internal Revenue Service IRS tax news. ABLE or ABLE accounts are a valuable benefit for taxpayers with disabilities. IRS tax tip 2020-160, November 24th, 2020. Living with a disability can come with additional expenses. Achieving a better life experience accounts, ABLE accounts, there's a link to those here, are authorized tax-advantaged 529A accounts that help disabled people pay qualified disability-related expenses. Here are some key things people should know about these accounts. Annual contribution limits. So these are the annual contribution limits. The limit remains at $15,000 in 2020. Certain employed ABLE account beneficiaries may make an additional contribution up to the lesser of these amounts. The designated beneficiary's compensation for the tax year or the poverty line for a one-person household. The 2020, this amount is $12,490 in the continental U.S., $15,600 in Alaska, and $14,380 in Hawaii. The Savers Credit. ABLE account designated beneficiaries may now be able to claim the Savers Credit. There's a link to the Savers Credit here for a percentage of their contributions. The beneficiaries claims the credit on Form 8880, Credit for Qualified Retirement Savings Contributions. There's a link to that here. The Savers Credit is a non-refundable credit available to individuals who meet these three requirements. They got to meet these three requirements, are at least 18 years old at the close of the taxable year, are not a dependent or a full-time student, meet the income requirements. Rollovers and transfers from Section 529 plans. So now we're talking about the Section 529 plans. What if we want to roll them over to some other location or transfer them? So families may now roll over funds from a 529 plan to another family member's ABLE account. The ABLE account must be for the same beneficiary as the 529 account or for a member of the same family as the 529 account holder. Rollovers from a Section 529 plan account toward the annual contribution limit. For example, the $15,000 annual contribution limit would be met by parents contributing $10,000 to their child's ABLE account and rolling over $5,000 from a 529 plan to the same ABLE account. So you got that kind of cap that's going to be applicable. You have to take that into consideration even when doing the rollovers. So qualified disability expenses. States can offer ABLE accounts to help people who become disabled before age 26 or their families pay for disability-related expenses. These expenses include housing, education, transportation, health, prevention, and wellness, employment training and support, assistive technology, and personal support services. Though contributions aren't deductible for federal tax purposes, distributions, including earnings, are tax-free to the beneficiary as long as they are used to pay qualified disability benefits. Let's read that one more time because that's kind of the key component here. Though contributions aren't deductible, so it's not like an IRA in essence. You could think of it similar to an IRA. You're putting money into another account, but when you put money into a traditional IRA, the amount that you put in there is kind of deductible, and you see that right on the front line. But if it's kind of more like a Roth IRA, if you have familiarity with a Roth IRA, where you put money into it, you don't get the deduction, but you still get a tax benefit of putting the money into it. So, for example, one more time, though contributions aren't deductible for federal tax purposes, distributions, including earnings, are tax-free to the beneficiary as long as they are used to pay qualified disability expenses. So more information can be found at the links below. We have ABLE accounts, tax benefit for people with disabilities, Publication 907, tax highlights for persons with disabilities, Form 1099 QA, distributions from ABLE accounts, Form 5498 QA, ABLE account contribution information, instructions for Form 1099 QA, and 5498 QA. So there's links to those items here. There'll be a link to this in the description.